Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq. So let's start, as we always do, with a look at the daily chart of the S&P 500. Here you can see that what's happened recently is the market has broken down below the rising trend that had been very linear upward trend up until the beginning of September. That breakdown below the rising trend also was accompanied by a breakdown below the 15-day exponential moving average. But what's happened since is that the market seems to have traded down to the 50-day moving average, and it's held that 50-day moving average so far. But at the same time, it also appears as if it's finding a little bit of resistance at the underside of the 15-day exponential moving average. So what it means is we've got a market that is somewhat range bound for the time being between about 33.30 and up to about 34.25. On the daily chart there, you can see there is positive reverse divergence evident. So that's where your stochastic oscillator makes a lower low, yet your price is making a higher low within an overall rising trend environment. So that could suggest that we may see a little bit of a move to the upside, but it's not clear at this point in time. If we fast forward and have a look at the hourly chart of the S&P 500, here you can see the recent trading activity in more detail. You can see that recently we saw a break to the downside with a gap up at about 35.60, and that was when the market peaked in early September, and it's since come off the boil a little bit. Now, over the last few days, in the last week really, the market has been consolidating in that area between 33.30 and up to about 34.25. You can see last week there was a brief break down below 33.30, but that turned out to be a false break to the downside, and the market has subsequently recovered, and it actually gapped up quite nicely yesterday. Now that gap to the upside is interesting. What followed was a small bull flag pattern that appears to be forming on that hourly chart, and at the time of recording this interview, it seems as if the market is pricing in a possible break to the top of that small bull flag pattern, and that would potentially set up a move up to the top of the trading range there at 34.25. Do also keep in mind that this week we've got the FOMC meeting, and it's going to be very closely watched to see how the market reacts to that. So it's possible we do see the market chopping around and maybe marking time ahead of that FOMC announcement. But if it was to break up above 34.25, that would potentially be bullish for a move, maybe back up towards 3,500. Of course, on the other hand, a breakdown below 33.30 would be bearish and would point to further downside for the S&P 500. Let's then take a look at the Nasdaq 100, and here we start with a look at the daily chart. Very much similar to the S&P 500 in the respect that it's broken down below that very nice linear upward trend that had been intact for the last couple of months. But again, notice this index is finding support at the 50-day moving average, and also there's some lateral support there at about 11,000 on the Nasdaq 100. So thus far, it seems as if it's holding that 11,000 support, but also it's finding a little bit of resistance at the underside of the 15-day exponential moving average there. And again, I guess while we wait for the FOMC meeting to happen, you might find that this market chops around and marks time a little bit. Let's then have a look at the final chart that I've got here, which is the Nasdaq 100 hourly chart. And there you can see the recent trading activity in more detail. Again, we saw a gap to the downside in early September. That was when the market peaked and it started to sell off, and we've seen some consolidation since then. In the last week or so, there's been a trading range between around about 11,000 up to about 11,600. And right now, the market is right bang in the middle of that trading range. So we'll need to see what happens in the next couple of days. A bullish outcome from the FOMC meeting could potentially see that market heading up towards 11,600 again. On the other hand, a bearish outcome might see the market have another go down at 11,000. So those are the levels that we've got to be keeping an eye on in the next couple of days. Somewhat choppy action ahead of the FOMC meeting, but let's see how things play out after that. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.